Just bear with us for a few seconds. Mr. Chakraborty will be just walking in. Just. Mr. Kamath there on screen?
Yeah.
Can we have Mr. Kamath on screen, please?
Can you have a split screen and Mr. Kamath present there?
Yeah, I'm here, Kamal.
Yes, sir.
Yep.
Very good afternoon and welcome.
Thank you very much. And
Yes, we can hear. You can hear us, right?
Very clearly, thank you.
Okay. And can you have a microphone in the audience so that anybody wants to ask any question in between? So, very good afternoon and Shubho Pujo. This is the last session, Scripting India Growth Story for Global Play. Lot of economics you heard. We have just 1 hour. So, we'll sharp 1:46 we will end. And you can't, I must say, congratulations Bengal Chamber. We can't have a better panel than this. Mr. K.V. Kamath on the screen, I mean, he wears too many hats. So I don't want to waste his time, our time describing all this. Right from ICICI, Infosys chairman to BRICS, he is the guru of retail banking in India. And because of his latest, the last position in BRICS, nobody you can get better than him from his perch to talk about India in respect to the rest of the world. So, Mr. Kamath, welcome, sir.
Thank you.
Chakraborty, sir, IAS, he ran many state undertakings in Gujarat, then got into finance ministry, and now he's the chairman of India's largest bank in terms of market cap and second largest in terms of assets, HDFC. Thank you, sir. Soumya Kanti Ghosh represents State Bank of India, India's largest bank. 1 out of every 3 Indian is his customer, his bank's customer, and world's only Indian bank among the top 50 world banks. Roughly about 22-23% of banking industry SBI accounts for. That's Soumya Kanti Ghosh, is the chief economist. And finally, we have Ronen Banerjee, a consultant. So a consultant, an economist, a bureaucrat whose understanding of finance is great, and Mr. Kamath. 4 of you. I'll speak the least. I'll just have some, we'll try to make it interesting and interactive. In between, we'll take a few questions. So first, we'll have asked each of you to give some preliminary remarks, maybe 3-4 minutes each, and then we'll get into some micro issues. But before that, just to introduce the subject, I'll tell you something which happened in the past 3-4 days, or maybe more than, maybe just about a week. One is Ruchi Sharma, pretty well known in the markets, global markets. He's the chair of the Rockefeller International. Just 2 or 3 days back, he wrote in Financial Times, he said the 7 economic wonders of a worried world, and India is one of the 7. I'm not getting into all the details. Others are Vietnam, Indonesia, Greece, Portugal, Saudi Arabia, and Japan. And India says, and he writes, policy makers have done enough reform. And he says India is gravitating towards second largest emerging economy. Just 3-4 days back in Financial Times. Yesterday, one of the leading newspaper wrote, Ontario Teaching Pension Plan Board, which had exposure about 18,374 crore in the Indian market, is just setting up an Indian office for the first time. Finally, all of you know that it's an old news, a week-old news. Apple to make iPhone 14 production in India. 5% of the global production will be in India. And by 2025, about 25% will be there. And some macro numbers, between 2008 and 2022, we are one of the very few countries where debt to GDP ratio is going down, has gone down. And as we stand now, we are the 5th largest economy. Of course, critics say you have overtaken UK. So what? The per capita income in India is much less. Look at Indian population. Yes, there will be always other side of the coin. But the fact is we are the 5th largest economy and we have 3.5% share of global GDP. About 8 years back, we were 10th largest economy and our share of GDP was 2.6%. So that's the India story. And beyond the numbers, As you know, we are talking about, RBI has been talking about 7.2% growth. Almost all agencies and raters have downgraded their estimate, but more or less 7% is given this year. So that makes it fastest growing one of the major economies. Our corporators have cut down their leveraging to a large extent. Our banking system is in fine health. Mr. Kamath a few months back said he has never seen such a healthy banking system in the past 5 decades. Yes, they are well capitalized. Their NPAs, a bad dream, nightmare is over. Both gross and net non-performing assets have gone down sharply. A CRISIL note says that by 2024, fiscal year 2024, we have 4% gross NPA. And finally, good story is this: credit has started picking up. It's 16% plus in September, year on year. That is between last September and this. This is the 9-year best credit growth. So with this preliminary remarks, from now on I'll keep my mouth shut just to set the context. India story. Over to you, Mr. Kamath, to start with you, scripting India growth story for global play. Sir, all yours.
Thank you. Thank you, Tamal. Good morning to all fellow people on the panel and the audience, and thank the Bengal Chamber for this invitation. Tamal, you already set the story, the caption, history, India's history in terms of growth. You already articulated. In fact, you set the platform, as it were. I'll just start with one intriguing number to me: 5th largest economy. Again, we have a very eminent economist on our panel, and maybe he could later on do this, not necessarily here. I think we were 5th largest based on exchange rates prevailing whenever these numbers were determined. But given what has happened in the last virtually a month or 2 months, the way some of the other economy number 2, 3, and 4, their exchange rates have moved, and of course we have also weakened. But in comparison, we have weakened much lower. In fact, those currencies we have strengthened. I do not know where these numbers are, but that's for a separate day. I entirely endorse what you're saying about the growth story. But let me put a perspective to it, a picture to it, as to why I believe not this decade, the next 25 years are going to be Indian. For growth to happen, there are 2 or 3 key determinants that are required. I think one key determinant is, do you have an investment path forward? If I look at India, you have clearly to get our water equation right. By water, I mean once you get water right, you get agriculture right, you get animal husbandry right. So basically, carbohydrate and protein is met. And a whole lot of investment needs to go there so that we are not dependent on one. So point number 1. Point number 2, we look around us, there is clearly a long runway for infrastructure. So we are nowhere near the situation where a lot of countries in the West are, namely, that they are building highways and railroad to nowhere. They don't have really a need, but they're investing it to just show growth. We have clearly a path in terms of what we can do on that route. Third comes manufacturing. Manufacturing is, as you said, we're not seeing cleaner balance sheets. I haven't seen in 50 years of my career, banking, or more importantly, in this context, the industry, balance sheets of industry. So which means that they have the ability to invest and grow. Of course, the flip side of it is there a consumer? Clearly there's a consumer, and I'll connect it up last when you talk of GDP growth. Then we have something that is very, very exciting that's happening, which again is not there in the West. There is the whole digital drive. And I heard Richie sometime earlier where he said that in China, for example, the digital economy is 35% of overall economy. My guess is probably in our case 3, 4, 5%. I don't think so. Even lower than that. What is the opportunity? Will it be 35%? Let me say it may or may not happen. But will 15 to 20% happen? Certainly 15 to 20% I believe should happen, given the rapid transformation that is happening in terms of digital architecture in India. That is, rollout that is happening, affordability of digital connectivity that is happening, absorbing the digital connectivity by the layperson, by corporates, banks, of course, and so on. So the digital architecture in terms of not only fintech, but the entire spaces are going to happen. And I believe that digital architecture will be probably the biggest employment provider going forward. We can do the numbers later on when we discuss in detail, but my belief is a large part of the incremental jobs that we will need to find will come from the digital universe as we go along. Now, if we assume, again, as I said, 15 to 20% as a contribution of digital to the overall pie, and I take the numbers, Tamal, you articulated the 7.2 number or slightly scaled down numbers. Let's not debate it. Let's say it is 7% plus, and you add 15 to 20% to that, I think we are looking at 8 to 8.5 trillion. So I want to lay this proposition up front that I look at India 75 to 100. That is going from 75, India at 75 to India at 100, and India compounding its GDP at a rate of around 8%, 8% plus actually. If you do the math, simple math, I think we will be a 25 trillion economy at 100. So I look forward to India going from 75 to 100 and going from in those 25 years going to be a 25 trillion economy. I'll stop here for the moment, Kamal.
Thank you, Mr. Kamath. 360-degree view and pretty realistic. Everything is touched upon. So now, Dr. Chief Economist of State Bank of India. Dr. Ghosh, over to you.
Thank you everyone, and thank you for inviting me to this platform. I'll just put out some numbers which actually will show you how India is doing in the last 4-5 years. Let me start with the numbers related to the economy, and then also I'll start with some of the numbers related to social inclusion, because that is one thing which is also empowering people at the lowest strata. Total investment announcements in the last year, rupees 20 trillion. Out of this 20 trillion investment announcement, the private sector participation is around 70%. And if I assuming 40% is the ratio of this conversion, which is the historical trend, that makes it a number of around 8 trillion. Total number of gross block which has been added to these companies in the last 2 years is around 12 trillion. 9 trillion is the work in offing. So that means that a large part of what is the total amount of deleveraging the corporates have done in the last 2 years in the pandemic, around 2 trillion. So basically their balance sheet is now rock and steady and to fund the finance revival. Bank credit growth at 16%, 10-year high. And most importantly of the banking sector, the growth is driven by the SME sector, where the credit growth this year is already at 70,000 crores for the first 4 months. And there was a lot of talk that the SME sector was hit. Yes, there was some impact, but if you look into our bank's portfolio, the amount of restructured portfolio is actually significantly on the lower side. So that means that the MSME sector has been now doing quite well. Let me now turn my point to the external sector. Rupee total devaluation beginning from February 24, 2022 when the war started is around 7.8%. How much has the dollar appreciated, dollar index? Close to 19%. So basically, and compared with the figures after the taper tantrum when the dollar index appreciated by 5% and the rupee dropped by 48%. A lower part of the depreciation related to the dollar index indicate that the rupee weakening is mostly to do with the dollar strengthening. What has been the, equity markets? Yes, the equity markets have declined in the last few days, but if you look into the overall equity markets globally, from January 2022, we'll see that the drop has been in the range of 20 to 30% across all countries. In India, the drop is 6.4%. If you look into the foreign exchange reserves decline, yes, reserves have declined by more than 80 billion, but a large part of that is because of revaluation. And if I look into countries like China, the reserves have dropped by 140 billion, and for Singapore, a small country, the reserve increase decline has also been more than 100 billion. So if I take all these numbers and finally, at the lower end of the spectrum, out of the total incremental deposits which was added to the banking sector last year, 66% of that came from women in the rural areas, and 35% of that was from the women in the rural areas. And the other important thing is that another data which I want to cite from our portfolio, and this is basically the empowerment which is happening, is that if you look into the total loans which are disbursed for the housing loan, for example, if I look into our portfolio, a large part of this in the tier 3 and tier 4 cities, where the rural populace is actually close to 50%, the women are actually borrowing more than their male counterparts. And in some cases, this number is more than 50%. So some sort of a revolution has been happening in terms of financialization of the deposits, financialization of the women deposits, and I think over a point of time, this should translate into much better opportunities for all sections of the people and also development of the social infrastructure. I would stop here, and maybe at the course of time, I'll discuss some more numbers.
Thank you, Dr. Ghosh. So I heard in the first round you're talking about MSME. Here is one State Bank of India person saying that actually the restructure loan in MSME is not that much. So there has been apprehension that MSME sector is facing crisis and that the government scheme, which as and when it matures, will find that banks are holding on too many bad loans. He's saying no. He's also saying that rupee depreciation is not per se a reflection on Indian economy, nothing to do with the weakness of Indian economy, but is the dollar strength. And comparatively, Indian currency has lost much less than other emerging market currencies. And another twist, a lot of homework he has done, another twist is doing the new India where the women empowerment. So let's hear before, we'll keep you last, the biggest artist comes, big artist comes at the end. So let's hear a consultant voice.
Thank you, Damalda, and good afternoon, everyone, and thanks for inviting me to this. I think we referred to Ruchir. I believe that he is currently in a bit of a pessimism phase. I am an optimist. If you look at it from an external angle, if I look at India attracting investments, if you have to have growth, we need to attract investments. So investors are either market seekers, they are resource seekers, or efficiency seekers. Now, I think on all these three aspects, the market in India is big, resources is not a challenge, and efficiency you get when you come to India in terms of at least the price efficiencies, and we will reach the other efficiencies soon. The government is working towards it. So from an external perspective, we tick all these three boxes. Now, if I look at, we are talking about growth, 7% plus, or somewhere around 7%. Now, if you look at the components, means consumption, it is actually what? It is a private consumption, government consumption, investments, and our net exports. Now, from a consumption perspective, while we have been saying that the aggregate demand will weaken, yes, there is a stress at the bottom of the pyramid, but the demand is not slowing down. And I think, at least for this year, in the next quarter, we know the festivities that pick up, we will have a strong demand. So clearly, we don't see the consumption engine slowing down. Now, coming to the government consumption part of it, now government has enough firepower. Now, when during COVID, the government was not splurging on their public finances, and we were quite critical of the government at that point of time, that we should be doing more, but now we are saying that India is probably having better public finances than many other nations which actually splurged a little bit more. So the government has the firepower to continue on the government consumption side of it. And also, coming to the investments, government has the firepower to continue to do the capex, higher capex allocations, and actual expenditure that is happening on capex that is continuing. So the government has the firepower to do it. And why it has the firepower? Because, again, COVID has helped a lot. There has been a huge amount of formalization of the economy through digitalization. Now, there's a lot of informal channels where taxes were not getting collected, which have come into the tax net. So the tax base has widened. And therefore, we are having a very good tax buoyancy. The budget had estimated that we'll have only 7% growth in our tax collections. Now, we are going to have a huge amount of tax collection, much more than that. It was clearly an underestimate. And it was possibly done to keep the fiscal deficit numbers presented at a particular level. Now, we know that given the buoyancy, and it is not easy to spend, and it is not so easy to step up your spending. It takes time in capex also. While we are spending at the rate at which the allocations have been done, actually the government is becoming more and more transparent with its budget making. If you see a lot of items, large items, which were outside the budgets. One example is the food subsidy. They are on budget now, and still, if you look at the revenue expenditure of the government, it is more or less at a similar level of the previous year. So which means that a lot of spending the government is directing towards the productive spending. So that is giving us a boost. Of course, if you look at so I've covered CGI and now the exports part of it. So exports, given post-Ukraine and the positioning that India has had, the relatively non-aligned positioning and going unscathed because of that positioning gives a lot of confidence to the global players to take some part of their supply chain to India. And actually that will not only help in investments, but it will also help in exports and creation of jobs. So I believe that we are on a very good track at a very good time. And as Mr. Kamath said, in the next 25 years, the vision that we have, that can we become a developed economy, I believe we can.
Thanks, Mr. Banerjee. So I believe we can. Very optimistic note. He's talking about there are cynics who are saying where is the consumption, but he sees consumption is growing, and he also refers to the tax collection, which all of us know that has been growing, the GST and the direct tax collections. These are all signs of a growing economy. So over to you, Mr. Chakraborty. First, you are a policy maker till recently, part of Delhi Finance Ministry, and now you are on the part of a non-executive chairman of India's second largest bank by asset. What's your preliminary remarks?
Thank you, Mr. Bandyopadhyay. A very good afternoon to everybody. And speakers have mostly covered most of the areas related to the fundamentals of the economy. When this year started before the budget making, in one of the columns I had mentioned this is a year of predictable unpredictabilities. I had in mind that it would be COVID. As unpredictable things are, it turned out to be completely different things. The cash that was sloshing around after 2008 global financial crisis had to had its impact somewhere. The inflation, as we see, no longer a very transitory inflation as everybody made us believe last few years. Then to top it all, you had war and then the food grain issues, and the energy to an extent we had seen pass much higher prices. Today the prices are not that high, but there is unpredictability on account of war. And the war is not taking a turn. Hopefully it doesn't take turn for the worse because of the kind of personalities involved. So globally, if you see the update brought in by IMF also, it has downgraded the global growth scenario. And rightfully so, because these things would continue to contribute towards the global downswing. To top it all, one of the things, and again to take Tamal Babu from Ruchir Sharma, whom you just referred to, he has also talked about the loss of productivity. And if you go to Europe, you realize that something which could be done in 5 minutes, they're taking an hour. There is a labor issue, there is a labor productivity issue, which is globally, and to an extent, you are the leaders of the industry, you'll perhaps understand much better, to an extent even pervading in India also. Now coming to India, what are the growth drivers? I see one of the things which has been mentioned, and I reiterate that the banking sector is in the pink of the health because its capitalization has been restored, NPAs are low, the capex cycle has again started. Now, to predict as to how this capex cycle will turn out will not generate more NPA but generate more growth is what is everybody's wish. That will depend upon how the demand scenario plays out and what kind of an asset people end up investing. However, as Dr. Ghosh has just mentioned, today the savers are much better diversified. The second thing is that economy is far more formalized today, courtesy demonetization, courtesy GST. And also the digitalization of the economy, which on UPI has driven large number of transactions. And even if you go to the remotest part of the country, you can use your mobile and just put it and pay. And there the communication, the infrastructure which has been taken. And also the infrastructure push that has continued through the National Infrastructure Plan, now PM Gati Shakti, which is pushing more and more capex into the system. I'll come subsequently as to how much that can be sustained. Debt to GDP ratio would have been a concern, but luckily our debt is not denominated in dollar, which few years back the pundits wanted that debt to be dollar denominated to take advantage of lower interest rate. Luckily policymakers didn't take the bait. And today, as we go along, as the tax, just Ronan mentioned, that the tax is rising in the last 60 quarters. For the first time, we are seeing tax to GDP ratio at 8%, which used to be 7%. So these are the kind of drivers which are showing towards a better growth. And to add to it, the PLI, which has helped the pharma and IT sector, they do indicate an availability of the runway. And perhaps how we use it could possibly come in subsequent rounds. Thank you.
Thank you, Mr. Chakraborty. So once again, very optimistic note. And you said that most of things have been said because you have the disadvantage of a last speaker. So let me make you the first speaker in this round. And this is also a common round. And then later we'll get into specific thing and all. And Kamath, Mr. Kamath, you will be the last speaker. Okay. Now, essentially, what I want to ask you, give us a few minutes each, that till the first rate hike, which is up-cycle rate hike, Reserve Bank of India did 40 basis points. Subsequently, we had two more rate hikes, 50 basis points each. No, I'm not asking what is going to happen tomorrow. What I'm saying is this: we are claiming that India is decoupled. Indian economy is decoupled. Don't get into all this, what's happening globally. We are decoupled. And here inflation, which is incidentally for the 8th month in a row, last August, I'm talking about last month, August number is this. It's more than 6%, which is the upper band of RBI MPC's mandate. And also the MPC Act says that if 9 months in a row inflation is more than the upper band, then RBI has to explain to Reserve Bank, to the government of India why it has been done so. It had happened during the COVID time, but that was an exceptional circumstances. Now we are post-COVID. But we are claiming that these are all supply side disruptions. It's a typical India story. You don't bother about what's happening in the globe. We are decoupled. Now, Mr. Chakraborty, with you, I'm starting. Do you think that we have got that kind of strength and that kind of, whatever you call it, resilience, that we are decoupled from the rest of the economy? And if so, then why happening on the interest rate front? Why inflation is not going away?
Well, we are not decoupled. The very fact that we import a large part of our energy, we do a lot of exports, we have remittances, and I'm talking about those very big numbers, apart from the fact that perhaps other than North Korea, nobody else is decoupled. Even North Korea would be very closely coupled to China close by. So we are not decoupled. The advantage that we have is that we have a very large middle class, which the institutions have brought in, and that middle class has grown further in last few years. Its aspirations have gone up, and the formalized economy helps them. And therefore, that consumption that they are driving, and what has happened that the rural-urban employment is also flipped. During COVID, people went back to rural areas, as one had seen. They have flipped back. The contact service industry has started again. though the last quarter their results didn't show that kind of an increase as they should have, which resulted in a slightly lower GDP growth than most of us would have expected. I guess there's some data error, I'll not get into that. But people coming back there would add further to the consumption, because the moment people come back to from rural to urban, there's roughly 2.5 to 3x increase in consumption. And this festival season, one is waiting to see as to how much that impact has taken place. So there is an internal sort of push which comes from the consumption, which is India's story actually. India's real story comes out of that, and export is brought through PLI, which is pharma and IT, as I had just mentioned. Inflation, let's face it, it would remain there with all of us. It is imported through energy. It is also imported through a lot of cash which was there in the post-2008, as I mentioned before. And also to an extent that some amount of food grain prices would also keep going up and down. There have been some issues related to one or the other crop. So these put together would add some amount of stickiness, and the core inflation is also high. Though WPI is coming down, but still it's high enough not to cross that for us to make very comfortable that that band of 4 to 6% would be, that is 4 plus minus 2, would not be breached. We are still in the level of 7% as the August number showed. Therefore, to expect that the interest rates would come down in the near future, perhaps may not be, I don't think, will not be a good estimation. Of course, tomorrow's MPC would only show that. So that is on the inflation story. Of course, inflation is a tax on poor. To that extent, sooner the inflation would come down, the better it is.
Thanks, Mr. Chakraborty. So we are going by the reverse order. Mr. Kamath will have the last word on decoupling. Mr. Banerjee.
So clearly, as I agree with Mr. Chakraborty, that we are not decoupled for sure. And clearly, and we actually are getting more and more coupled over a period of time. But we also have built a lot of shock absorbers. So while we are not decoupled, but we have a lot more ability to absorb shocks. And some of those ability, why it is coming is, again, if you look at our capital markets, the number of people or the participants in that has gone up significantly. So when the FII outflows happened, about 2.6 trillion rupees or so were withdrawn from the market, our markets didn't crash to the extent what happened during the global financial crisis. We didn't see that kind of a crash. That's because the domestic institutional investors stepped in. So that the financial markets have got a little bit of a shock absorption capacity. That is there. The second is that because of the digitalization and formalization, the amount of revenues that the government is generating, it has the ability to pump prime. It recently, I think today or yesterday, they extended the support to be given at the bottom of the pyramid, because the maximum stress of the inflation is being felt at the bottom of the pyramid, and that needs to be supported. So the food subsidy program has been extended by another 3 months. So there is that ability of the government to absorb the shocks is much larger by way of pump priming. The third is, I think in the previous panel we mentioned that the higher end goods are selling more and lower end goods are selling less in almost all categories. That was mentioned. Now, it is good because what has happened is, which means that at the income spectrum, which is at a higher level, the sentiments are good. They are consuming. Now, the consumption can start either from the bottom or from the top. Now, the consumption is starting from the top. The services engine, which was not firing at all for the last 1.5 years, has started firing. People are going out. If you look at hospitality, tourism, they are very strong. We also, in a way, indirectly, when our exchange rate, yes, there is a positive and negative on the exchange rate, but as rupee has depreciated, relatively, means I know that some other economies will become more attractive, but we can possibly attract more tourism also. And it could be our healthcare services, which is kind of, we are facing health tourism, people can come in. So there's a lot of shock absorption that is there. Now on the inflation, I'll just make that point, last point, that our inflation primarily is high, while the core is sticky and it is under 6, about 5.8 or so is where it is staying, but the inflation is primarily fueled by the food prices and the fuel prices. Now fuel prices, we know currently the government is not reducing the prices, pump prices, because there's a recouping of the losses that had happened. Now it can be brought down at any point of time. And food prices are volatile, and that cannot be addressed by a rate action, because the rate action cannot influence that part. Therefore, I hope that the MPC, while it will be constrained to raise the rates, do not give a very, very hawkish guidance for future. That would be my...
Thanks, Mr. Banerjee. Hope MPC is listening to you, all the 6 members. Over to you, Dr. Ghosh. Same, sir.
No, I will just put the things in a different perspective. While I somehow agree on the fact that decoupling is difficult for a country like India, because as the global economy gets more and more integrated, but my satisfaction in terms of trends which are doing in the last 2-3 years, I think on the policy front, that gives us hope that we are actually moving in the direction of decoupling. Let me give you some examples. Before I start with the examples on the inflation front, let me give one point out of the way. I think one way of looking into the inflation data, I mean, basically, is that it is based on a 2012 weight, where the food had a weight of 46%. Today, I think no one believes that the share of food in CPI could be more than 30%. That is actually given in the data in the National Account Statistics. So I think that needs a revision. But having said that, let me say why I say that this decoupling may be yes, it's a trend which may be getting a little bit reversed. For example, if you take the example of our central bank, I think all central banks, specifically the Fed, and I think this recent inflation problem has been because of countries, developed economies, because of the too much fiscal extravagance. But I think our central bank was the first one to front load rate hikes, front load data projections, front load liquidity adjustments. And I think the Fed started to raise rates, and it moved from a definition of describing as transitory to permanent only after a significant period of time. So from that point of time, I think our central bank, RBI, possibly has started the course of this inflation fighting much before the other economies, other central banks discovered it. Secondly, the other important thing in terms of decoupling, and Mr. Banerjee mentioned, is that I'll give you one data. Before the COVID happened, if you look into the total household financial savings, the total exposure of the households in equities, incremental basis, was around 70,000 crore. During the last 2 years, 2020 to 21, if you look into the overall net investment of the households in equities, it is a number which is close to 2.5 trillion. Just imagine this number. And because of this, our stock markets actually have not dropped to the extent which the other countries have seen. So this is also another trend because of because of the opportunities, because of the investor protection, because of the investor sentiments. I think this household participation is becoming a self-fulfilling prophecy in terms of investment. So this could be another decoupling trend. And finally, if you ask me, the one important point, yes, the formalization a lot of people has discussed, but let me talk about another sector which I have just mentioned, and that also shows a contrarian trend. Indian property sector in the first 3 months, the sales in all the metropolis have jumped by 60%. And in a country like China, I think China is facing a lot of problems. It has been now declining for 11 months in a row. So to conclude, yes, it's difficult to decouple, but maybe with the set of trends, the data which is coming out slowly, it could actually give us hope that maybe in the couple of years down the line, our policy makers and regulators will be able to chart and course which may not be entirely dictated by developed countries.
Thanks, Dr. Ghosh. So, Mr. Chakraborty and Mr. Banerjee said, no, it's not decoupled. In fact, Mr. Chakraborty said it's only North Korea and to some extent China that can claim to be decoupled, and we need to dig in to see what's happening. But here is Soumyakanti Ghosh saying that no, we are actually on that trend. And I wish Mr. Das, RBI Governor, has been listening to you. Unfortunately, he is busy, the MPC meeting. He is saying that we are the most alert and most aggressive central banker fighting inflation. It will be honey to his ears, music to his ears, not honey. So good, great. We'll hear Mr. Kamath. Sir, you have heard them, the same thing on decoupling. And after that, we'll take one or two questions from the audience and get back to some micro issues. Over to you, sir. Mr. Kamath.
Thank you. I think we are progressively decoupling. I think that we have made tremendous headway in that part. The reason is very simple to look at. If we had not, we would not have been in this better off position compared to other countries. I look at it purely from a macro view, as it were. However, in this whole context of decoupling and maybe creating an identity of our own, I think we need to do much more. Government is doing it on several fronts, but there is one front which I call it under a very broad heading, the economic front. We need leaders like Soumyakanti, economic leaders. Soumyakanti is somebody that I respect and I follow what he writes a lot and what he says a lot. But leaders, then I would expect them to take this fight on behalf of India. And I'll make 2 or 3 propositions. For example, I heard this interesting comment that he made, absolutely spot on, the index weighting in terms of food. And this is something that for 20 years it used to be the mix of industrial, what were the components there. I think that got addressed. Then some weights got reset. But if food again is causing such a distortion, aren't these things primary things that we should address so that we not only communicate to the public, but take correct policy decisions based on this? And B, we are then also communicating to the West in an appropriate manner, because a whole lot of things finally is we have to, in a broad way, look at what was laid down economic policy. There I have an issue again where India has to take the leadership, because it is us who will actually otherwise suffer. And that is, again, Soumyakanti has to be, I think, taking forward as we go along with this, not in this session, going forward in the next 2-3 years. Is economic policy, is the economic theory written over 100 years back appropriate in today's context? Let me pick a small part, one single part. We talked of the index and the weightage. So you see what is happening in our own context, inflation and interest rate. Having said that, let's go on to another issue there. We have a situation where the West is running double-digit inflation, and except for the US now, very quick rate increases, others are pretty content to sit where they are and let maybe the markets adjust some of the rates, but not really concrete rate action on the part of these countries. And then the expectation is that if you don't do it, if India don't do it, the rating agency is going to get after you, XYZ is going to get after you, which means the whole lot of adverse pressure that comes on you. My point is that we need to articulate what exactly is happening in our country, and how the steps taken by the government, the Reserve Bank of India, the whole equilibrium itself is probably getting us to figure out what is happening now is different from 100 years back, and what steps we need to take. So I'll ask one question in this context, not the panel, but in the wider context of the community. Rate increase to combat inflation. I want to understand how. If our impact of inflation, I heard that it is food-led, how will a rate increase impact inflation? And today, where you have got a very large borrowing class of people in India, which wasn't the situation 10 years back, what would a rate increase happen on that? Has anybody run the numbers? I have not seen anybody run it. What I'm giving only propositions. I'm not reaching any conclusions. Maybe I'm completely wrong. But there is a huge opportunity to do what I call classical work, new work, led by thought leaders like Samirkanti, who are in this field, a band of economists who come about and analyze what's happening in India, an Indian point of view, and feed it into the outside market. Because I firmly believe 100-year-old theory is redundant, particularly when you're playing footloose with that theory as far as it suits you in the West. 10% inflation doesn't matter. I'll still keep my interest rate low. I will not increase my policy rate. This, then is preaching to us. So we need to be able to stand up to that preaching and say what we have to say in our context. That will then lead us to a much stronger position to actually defend the rating that India should get. Otherwise, this rating that we are getting is always stacked around us. I will use the word, it is rigged. So it is rigged to be against us. And who can undo this? We. And we have to be forceful. We have to marshal our facts and present it. And I would think that it's not the government and the central bank which need to create this environment. It is our thought leaders, our economists who need to come out with this. And lay people will then support it, but the thought leaders have to take. One other part I want to put in this context here is the whole, again, new thought in terms of this new is the whole employment scenario. Again, the whole definition of organized and unorganized is already gone through, I would say, a metamorphosis change. Are we capturing this new, in the numbers that we're looking at? So one phrase we commonly hear is gig economy. The gig economy is organized or unorganized? How is it accounted for? And I'm not asking for any answers. I'm just saying, plus, if there are these new startups in the digital economy who are coming forth at pace, and of course, we hear a number, 75,000 companies have come in. I broadly work out, say, 20 people per company, 1.5 million. And if you look at what we learned during the white-collar revolution of the IT industry, for every job created, 5 other jobs were created. 5 other jobs clearly in the unorganized sector, not in the organized sector. I believe a similar thing is happening now. 1.5 million jobs have been created maybe in the digital economy directly, plus minus. I am not quibbling with numbers, maybe lower, maybe higher. And X number of jobs per job created is the indirect employment, unorganized, I believe, which means then you're talking of another a huge number of jobs, 7.5 million. You're talking of almost 8-9 million jobs created through this economy. Large part of it, I don't see it in any of the number work that we do. But clearly it is accounting to economic momentum in the country and a whole lot of things. People are buying stuff, people are paying taxes on that and so on and so forth. So, second proposition that I want to leave in terms of economic thought leadership as we decouple is to get into this whole definition of employment. So interest rate and theory around it, our index reweighting and theory around it, what's happening in an Indian context, and then the whole employment equation, so that we can take informed decisions and present those decisions as appropriate to the world. I am not reaching any conclusions. I am saying thought leaders should take it forward. Thank you.
Thank you, Mr. Kamath. So he's urging us, the policymakers and everybody else, to look at things in a different way, through a different prism, through a new approach. Because food is 50% plus of inflation, so why should there be rate hike? Similarly, the employment scenario also, he says that we need to look at it through a different lens. So any question anybody has here? If anybody has any question, yeah. Sir, please make it very, very brief. Sir. And to whom you are asking? Yeah, use the mic, sir. Yeah.
Sir, it's a very simple question. It's a common man's question. Our foreign exchange reserve has reduced to the extent of 100 billion from the top. It was 642, and last Friday it was 550, and today probably it will be 545. Okay. So we have lost 100 billion. You have said China has lost 150 billion, but China's foreign exchange reserve is more than 3,000 billion. That means 3 trillion. So if you compare the percentage, we have lost more. That is not my question. My question is that, is these reductions is a matter of great concern, great concern, or it is a matter to note only? This is my simple question.
Thank you. Let Dr. Ghosh Very quick, shorter answer.
No, the short answer is that I think just one clarification, China's reserves is now much lower than 3 trillion. I have the numbers, I can give it to you after the show. The second thing is that, no, I don't think that's a matter of concern because our import cover is still at 9 months, even though it has come down from 11.5 to 12 months. That's the reason today why there is now a renewed call in the market that they let the exchange rate find some level of value instead of spending on the reserves, because when the Fed is raising rates to 5%, which is the rates which was in 2008, which is every central bank is raising the rates like anything. I think it's futile to continuously, try to protect the rupee. If you look into the NDF market, which is basically the market which is the forward market, there the rupee is already trading at more than 82. It was trading at more than 80 in the month of August. So my sense is that, yes, it's not a concern, but at the same time, we should allow the rupee to find some sort of value in this point. Today, actually, the rupee has appreciated in the morning. And I'm sure that given our macro fundamentals, the episodes show that whenever there is a rupee depreciation, the rupee also strongly bounces back. 2013, rupee dropped to 69, it bounced back to 58. So we need to wait and watch through this period.
Thank you. Thank you, Dr. Ghosh. Any other question? Any other brief question anybody has? Others will shift. Looks like, no, they are very happy. So give them a big hand. Okay. Now, we have about 9 minutes left. Mr. Kamath, to start with you, very brief, sir, 1 minute probably. If I ask you, you are very bullish, you have asked us, the policymakers, to approach things in a different way. But if I ask you to list the 3-4 key challenges in the next 25 years that Amrit Kal was looking for to a global leader, just a minute or so, if you can tell us. 1.5 minute max.
Kamal, I'll just correct when I actually not asking.
Because we have been hearing a lot of optimism. We are doing this, we are capable of doing this. But tell us, warn us about the challenges.
Yeah,
3-4 key challenges.
Thank you. I'll just preface it with one thing. We said policymakers to do things. No. Policymakers, I think, have done the best job that they could have done. It is, I think, economic thought leaders. Swami Kanti is, to me, an epitome. 4 or 5 people have to come across and put up a different, I call it the presentation of facts, so that not only our policymakers, the wide world, and people who then evaluate us like rating agencies have a better perspective. Now, 3 or 4 things that could go wrong. I think ultimately life has taught us that it is execution. I say that it is opportunity. The runway is very long. There are all the other resources, people are aligned and so on. I would think the key risk that we will need to look at is what are the implementation issues that we can go wrong. So we need to make sure that when policy is set, then there is no disturbance to that policy. Contracts are made, then there is, those contracts are not jeopardized. I think if we do these 2 things, we are on a path. Third is on part of the people who are executing, that you execute at speed. If you are doing it in X number of years, do it in half X. But we will have to go about this with an urgency never before. If we slip on any one of these, any delay is cumulative. It's going to be deleterious to our entire path. So make sure policy that is set continues. Make sure what you are trying to execute continues, and stay focused.
Thank you. Thank you, Mr. Kamath. So, in sum, implementation is the key. I mean, you have hit the nail that Air India privatization was a joke. I mean, it continued for a decade or so. 2021 budget spoke about 2 bank privatization. Nobody knows where we are. So yes, implementation. And I remember when Mr. Kamath was heading ICICI Bank, I think your mantra was, if something is not working out within 6 months, junk it and get it for the new things. Okay, that's what you have told me.
90 days.
Yes. So, Banerjee, just very briefly, you are talking about consumption and all, but anecdotally we hear that consumption is only limited to the upper end. In this past 2 years, when you showed our resilience and all, the rich Indians have become much, much richer. It's not percolating down. I mean, not only to rural India, even in metros and all. So you spoke about consumption story. Tell me, is there the right connection? We hear that, like last week I got a text message from a friend, both husband and wife going for new cars. They're junking their old cars. If you go to any of those white goods stores, they'll see that TVs are not sold for 30,000, 40,000 anymore. People are going for 1 lakh plus. So these are the cream de la creme of the society. They are getting more, but it's not going down. Very brief answer.
Yeah, so I think it's right that the inequality, or at least there is an asymmetry of wealth distribution that is happening. And in this scenario only, where the government needs to step up to boost the consumption at the bottom of the pyramid. Now, it is not that there is no consumption at the bottom of the pyramid that is happening. Shoma Gandhi just mentioned that the real estate activity has picked up significantly. Now, when that picks up, there will be construction also needed. I know there is an inventory story around that, but there will be some construction that will pick up. If government is spending so much on capex, there will be construction that will pick up. If services sector is opening up, if the creme de la creme are going and traveling, then the contract services are bound to pick up. So it's a matter of, I think there is a stress, and there will be inequality because the wealth creation is happening in some pockets, but it doesn't mean that the consumption is happening only at that level. Okay. There will be a lagged effect, but we will see the consumption coming.
So lag effect, we will see consumption spread across. Dr. Ghosh, tell us, we spoke about success of PLI, productivity in schemes. We spoke about, we did not speak, but Make in India. So everything, but where are the jobs? Can you tell us? Very briefly, because you seem to be, full of data. So tell us, where is job creation? Very brief, 1 minute.
Okay, see, in terms of job creation, I think I'll still maintain that India is a country which is characterized by more of underemployment, because you don't find the people for the proper jobs. And that has been accentuated more after COVID. Yes, job creation in the Indian sector continues to be a challenge, but there are data. I think the moot point is that, and as Mr. Kamath highlighted, I think there is not enough data to buttress the points that how much job we are creating. Maybe it's inadequate, maybe it's grossly inadequate, or maybe we just adequate. So I think we need to have a proper perspective of that, but I still maintain that for Indian case, underemployment is the key rather than the unemployment.
Thank you. Mr. Chakraborty, I'm asking you because there are corporate India is present here. Can you tell us that we are expecting, or another rate hike is staring at us? We don't know what would be, is it 35, 50 or 60, we don't know. But is this rising rate, and probably we don't know what is the terminal rate, will it be 6.25 or 6.5, because US has been talking about prolonged rate hikes and all. So is it a disadvantage for the corporate India for investment? Does interest rate play a key role?
Frankly, if we look at weighted average cost of capital, I'll go down to fundamentals. And if you look at the weight that you attach to equity and the rates that your expectation from the equity and what is being done to the debt, unless one is very over-leveraged, frankly, it doesn't matter. And today, corporate India is not over-leveraged. They can easily take that. The IRRs are much higher, and they will easily cross the hump. The thing is, the issue where Mr. Bandyopadhyay things come in are, frankly, the demand side. And what the corporate India would be looking at is the demand side before coming. I don't think rates would deter them. Rates tend to deter on the retail side, not on as much on the corporate side. There's more of a noise. Everybody wants a lower rate, and they will also come down. And most of them are on the variable rates.
So the retail borrowers, the home loan and auto loan, those who take, they will feel the pain, but corporate India is enough deleverage, so it will not feel the pain. It will not come on the way of investment. Now, the last 1 or 2 minutes, 30 seconds each. For a change, I am changing all of your names, including Mr. Kamath, you are there. You are now Shaktikanto Das. You, both of us. Now you tell us how much rate hike you will do tomorrow. Will you change the inflation projection? Will you change the growth projection? Just 30 seconds each, sir.
Well, rate hike would be what was being done earlier because inflation is high. About projections, I don't think I'll do crystal ball gazing. On the growth projection, I'd be looking at somewhere between 6.5 to 7% for
rate?
this year.
6.5 also.
To say.
And rate?
To 7%
No,
for
rate,
the growth.
how much rate
Rate, I will, as I said, that since inflation is still high, the rate hike as was done previously, I think
50.
one would be looking
Okay.
at that.
But he will not say, this is the bureaucrat. He will not say 50. He said previously. First of all, he was aging. You should have been a diplomat, boss. Dr. Ghosh.
I think
Quick,
given the
30 seconds.
50 is now the new normal, so possibly tomorrow 50 basis point rate hike. Inflation projections, I think the central bank will not want to lower its guard, even though it's on the higher side, I think 6.7%. And growth, it may actually lower a little bit to 7%.
Banerjee, 30 seconds.
Yeah, I think given the gap between the US 10-year and India 10-year yield has narrowed, so constrained to raise by 50 basis point. It's a constraint, would not have liked to increase. On inflation, I would say that it will stick to the trajectory that it has given earlier. So that's on the inflation. What was the third one you asked me?
Growth.
Growth is 7%.
Mr. Kamath, you have the last word, sir. You are wearing the hat of Shaktikanta Das. You are making the policy. Tell us.
No changes.
Don't. That's your answer?
No changes.
Okay. No change in rate. And growth?
No change.
Growth, no change. Rate,
change
no
in-
change. Inflation projection?
No change.
Sorry?
No change.
Okay. So, Mr. Kamath, for the first time I'm hearing you, I mean, you're projecting yourself status quoist. Normally, you are pretty aggressive on
No.
all issues.
No, Kamal, you are also for the first time hearing me on a rate. I've never in 50 years talked on rates, but now I'm saying no change.
Okay. Thank you, sir. So this brings us to the end. Yes, 147, we have exceeded by 1 minute. So just 30-second conclusion is this. Everybody, all of us, all the panelists are gung-ho about India's story. Yes, there are roadblocks. It's not a smooth ride, but India is ready to go. India has the resilience, and India is not decoupled as yet, but we have everything, including human capital and everything else, to be different and lead the world in the next 25 years, all the so-called Amrit Kal. Thank you, and if you like, if you liked it, so give them a big hand. All these speakers. Thank you, Mr. Kamath. Thank you, Chakravarti Saab. Thank you, Dr. Ghosh, and thank you, Banerjee. Over to you.
Thank you, sir. That was simulation and rapid fire clubbed together at its very best. Without further ado, I would request Professor Ajitaba Raichaudhuri to please come up on the dais to do the closing remarks while the guests are seated on the dais, please.
Well, it's a great pleasure for the Economic Affairs Committee. They organize this economic conclave, and as chair of this committee, it's always a pleasure for me to see all of you here. And it's now tagged with the AGM. That's added importance given to this. That's a second degree pleasure I have from the initial pleasure which we had. One or two things, it's all optimism. We heard from the Honorable Minister in the inaugural speech. Then we have the panel from the manufacturers, the service providers here, then the economist, and then the panel here, mostly from the banking sector. Everybody is talking about a future where we'll be happy. And happiness is supreme. So at the end of the day, I guess all of us should go back and have a nice sleep, that tomorrow it'll be rosy. In fact, the problem is with economists, I'm an economist, we always try to point out if everything is true, we'll prove that is untrue. So I can now pick holes in everybody's argument. And then I can try to prove that it may not be exactly very rosy. It's a primrose path. Anyway, I'm not going into that. It's a very interesting session today. And I must thank the sponsors. Without the sponsors, this wouldn't have been possible. And we are very thankful to our diamond sponsors, Exide Industries Limited, and chief sponsor and patron and gold sponsor, JIS Group. And we have the gold sponsors, Parja Paints, Day and Bose, Indorama India Private Limited, PricewaterhouseCoopers Private Limited, State Bank of India, Tata Metallics Limited, Tata Steel Downstream Products Limited, Tax Connect Advisory Services LLP, Vesuvius India Limited. And as industry support, we have Swachh Environment Limited and Calcutta Tea Traders Association. We express our heartfelt thanks to all of them, all the sponsors, without whom this event wouldn't have been successful. And I again express my thanks to all the panelists who have come, the speakers, and all the participants here, without whom this program would have been successful. Thank you very much.
Thank you.
Thank you, sir. I would request President Mr. Abraham Stephanos to please come up on the dais and do the honors and give the mementos to the panelist and the moderator. To Mr. Atanu Chakraborty first. We can have a good round of applause for them, please. Dr. Ghosh. Mr. Banerjee. And finally, to our very own Mr. Bandyopadhyay. Well, that was a panel, as they... Yeah. This panel, as they say, it was a Galactico panel, representative from the global consulting major, an iconic banker, largest commercial bank in India, largest private bank in India. You name it, you have it all. So one more big round of applause to end the day's proceedings. Thank you. We are now serving lunch upstairs for the participants who have joined us for the India Economic Conclave. And with this, we conclude the 5th edition of our India Economic Conclave. We will quickly move on to the business session of our AGM. For that, the members and the managing committee members are requested to stay back, and the rest can proceed towards lunch.